Better than go for small account. If you are starting out, you just have small money, I'm gonna teach you how you can grow your small account very fast. After watching this video until the end, you're gonna know how to get over 69% in 2 weeks. As a bonus, I'm gonna give you my entry points, my target price point, so that you can get exchange today, right now. Welcome to World Traveling Millionaire Stock Investor and Option Trader channel. Where are you watching from? Comment down below. Today, March 10, I made over 4,000 within 1 day, just a few hours, just like that. And for the month of March 1st to March 10, 7 trading days, I made over 7,200. So about 1,000 a day. Started from January 1st, you might ask, hey, I made over 75,000 within 2 months. Sundays are holidays, so you could say it's only about 40 trading days, 20 trading days in a month, right? 40 plus trading days. That's pretty good. You can enjoy your life. You don't have to worry about your job. You can quit your job with this amount of money. So I'm going to teach you my secret from the beginning to the end, and this is one of them. So if you want to learn more, subscribe to the channel. I talk about cheap call options to play in March in this video, right? These are the call options that I talk about in that video. 41.2% within 2 weeks. Okay. Option trade 356, 23.72% gain in 2 weeks, right? Another one, option trade 357. So you see the trend. So when I trade, I make profits. About 80% of the time, I make profits. So that's my average win rate, 80%, 80 to 90%. So how do I do that? Okay, I'm going to give you 2 call options that you can look at it, you can study it. If you like, you can start trading tomorrow. Start studying today, okay? This is an Amazon 210 call option, April 17, right? And it was only $10.38. So one call option represents 100 shares. So you need to multiply with 100. So if you have 1,038, you could have just traded this call option on February 20th. So on March 5th, it hits $17. So 1,000 becomes 1,700 within 2 weeks. Very, very straightforward, very simple. So this is one of the call options. And another one, call option number 1, 215 strike price, expiration date April 17, $8.05. So you don't need to have a few $1,000. You can just start with $800. $800 on February 20th. So if you bought it and within 2 weeks, it's going to be 13.65. So what are call options? If you're a beginner, you might ask, call option represents underlying assets. In this case, it's Amazon stock. Right? Amazon stock, if Amazon stock moves a little bit, call option moves a lot more. So it's quite leverage. One call option represents 100 shares. So just imagine what you can do with $800. Amazon, look at this, over 1 month, it's only up 3.56%. If you want to buy 100 shares of Amazon, you need to have 20,000 plus, right? $21,433 if you want to buy it right now. So you don't need to have that much money. Even if you buy shares, only, look at this, 100 share, you only up 3.56% the past month, okay? But if you just bought it, call option, this one, even for 1,000, within 2 weeks, 1,764% gain. This one, 800, and then 1,365. So total you could possibly spend less than 2,000. If you only have $800, you can just choose one. The reason why I bought 2 is because I want to sell separately. If today I want to sell one call option, I have another option to sell tomorrow, right? It's a diversification. Plus, I want to have different strike price. So 250 strike price, you will see the difference. This is a 210 strike price. 2 weeks, how much gain? 64% gain. 2 weeks, how much gain? 70% gain. See? Why? Because 215 cost less to buy initially, 8.05. Then after that, it jumped to 1,265. Plus, this strike price higher, 215, much higher. Higher means cheaper premium. So if you are starting out with cheaper premium, when the stock gain goes up, you gain much more. And expiration date is the same. If the expiration date were different, let's say this is April and this is May, probably this one will be less. This one will be less. Most likely gonna be less. Okay. Now this is the same expiration date, and this one has higher strike price, so it costs less because of higher strike price. Why? Because remember, call option. What is call option? Call option is if you are a buyer of call option, you are saying that I like to buy Amazon 100 shares of Amazon at 210 strike price on or before April 17. So that means if Amazon stock goes above 210, let's say it becomes 220, you have much more value. This call option has much more value, right? It's definitely $10 different. If you just buy 215, the stock price rises to 220, you only have $5, right? $5 value in this call option. So definitely this call option, as the stock prices goes up, this strike price gonna get hit fast. This one will be the second. So that's why the first one is more expensive than the second one. 1,000 versus 800 on the same day. March 5th, 1,700 and only 1,365. The same day. That's the reason why. So higher strike price is good if you're super bullish. It's not good if the stock doesn't move so much, right? If the stock price doesn't go up above 215, let's say it's only 210 or 211. That 211, when the stock price is 211, this call is gonna have value, at least $1 value. But on the expiration date, if the stock price is 211 and it's 215 call will become zero, it will be worth less, zero, right? So that's why 215 is more riskier than 210. So that's why 210 costs more than 215. Do you understand? Which one do you like better? Comment down below. And look at this. So you might say, oh, I want to trade right now, but it's already gained a lot. Do I still have time? Yes. Okay. Why? Because Amazon stock is down 5.37% year to date. So 1 year is, you see, it has the top. At the top is 254. So it has a lot of room to run. Okay. So what's going to happen? These are my entry point and target price. Okay, my entry price is gonna be 213. Okay, this is not a financial advice, but I want to give you as a gift, education. You can study it, you can take advantage of it. My target price will be 220. Hey, Amazon still has lots of room to run to 220. 220. These are my own professional target price and entry point. Stop loss is going to be 205. Why? Because once the Amazon hit 205 below, it will go down much lower. Okay, so support is going to be broken. So it stayed too early. You know why? Because right now 214, and tomorrow after market is up, tomorrow if it opens positive, if I were you, if I just know about this call option, I would just enter if it opens positive tomorrow. Just gonna enter it, then probably get out before it at 220. Or if the expiration date gets nearer, let's say if it gets to April, I may just take profit or close the position, right? Because once the expiration date get closer, your call option is gonna lose value much more, okay? So these are my entry point, target price, stop loss. You can write it down if you want. And plus, what is better than these two call options? This is call option I traded today. Okay, I traded today. So $4 call option. So if you want to learn more, you can basically click the link down below. You can reach out to me down below as well, and you can learn what I have been trading right now, and you can execute tomorrow right away. Share, subscribe. I will see you in the next video. Bye.